Now we come to our third startup of today, which is NewPath. And so I would like to introduce you to Alistair Chesney, who is the founder and CEO of NewPath, which is an embedded finance startup focused on making smartphones more affordable in underserved markets. And NewPath has a patented software which makes offering installments less risky, and the company has worked with the United Nations and also with USAID to roll out its proposition in emerging markets. So welcome, Alistair. Please join me here. And I just go to your slides. Just as a reminder for those of you who have downloaded the first evaluation, please now evaluate ECT's presentation as well on your form. And now we go to the third one to Alistair.
Hi, I'm Alistair Chesney, founder and CEO of NewPath. NewPath's focus is on making smartphones more affordable. We're building a refurbished phone marketplace and B2B2C distribution network for refurbished phones. And we're combining that with US patented technology, which can make it less risky to offer installment finance, particularly in emerging markets. The patent covers the gradual functionality of a smartphone. We can basically reduce the functionality of a smartphone if someone doesn't pay on time, and that makes it less risky to offer handset financing in Africa and other emerging markets. The business itself grew very quickly, so we did 760,000 in revenue in 2020, did 2.8 million in net revenue this last year, and we're trying to do 12 million in revenue later on later this year. There's sort of three components to the business. The first part is our marketplace and B2B2C distribution network. The second part is this sort of circular economy business model, where we buy back used phones from consumers and wholesale, refurbish them and then sell them on. It's good for the environment, both less CO2 and using fewer rare earth minerals. And then the third kind of angle to the business is the FinTech component, where we have our patented software and we combine that with lenders who finance the handsets, sort of an embedded finance proposition which can be offered out via API to retailers, telecoms carriers, e-commerce companies, and fintech companies. We're in the middle of our funding round. We've raised 2 million so far, and we've got another 800,000 being invested in the next 2 weeks. And we've got a couple of other term sheets which are both sort of 7 figures, so it may end up having quite a big funding round. In terms of the pain point we're solving, globally there's about 950 million people who can't afford a $70 smartphone. But they could afford a smartphone if there's installments. So we know there's a kind of big slice of the world's population that our technology can assist. Close to home, a big portion of people in Europe have less than £2,000 of savings. So if they want the latest iPhone or Samsung, that's going to use up a big portion of their savings. Whereas what we can do is offer a refurbished Samsung on installments over 3 years and really bring the price point down for consumers closer to home. This just talks about our revenue growth, going from 760,000 to 2.8 million. To get to 50 million in revenue, we need to be selling about 130,000 phones a year, which in the grand scheme of the market we're going after, where there's arguably more than 1 billion potential customers, then we think we can eventually build a very big business. We're expecting to get profitable in the next 3 months as well. In terms of our team, our CTO and I have both got telecoms expertise. Our CTO was previously CTO of Phones for You, who worked very closely with John Caldwell, helped grow Phones for You to $1 billion in annual revenue. Phones for You was later sold for over $1.5 billion. Tom's had other exits to Bertelsmann, Tesco, and Vodafone, and he used to work at American Express as well. My background is I set up an SMS and telecoms business when I was younger, which grew to 4 million users, so we've both got kind of different bits of telecoms expertise. This just talks a bit about our patented software. So we've secured a US patent in Nigeria and a patent in South Africa, and we've filed in about 25 countries globally. We expect to get patent coverage in most of those countries. The software basically can reduce the functionality of a phone if someone doesn't pay on time, and that makes it less risky to offer handset financing in markets where there's typically little or no handset financing. Most of the world can't get a handset on finance. most people around the world are on a pay-as-you-go SIM card and have to pay for the device up front, so this is the sort of pain point we're solving. In terms of a wider sector, there's quite a few companies in the refurbished phone space in Europe. They're actually leading companies. So Backmarket, you may have seen the ads on the tube. They're the most valuable startup in France. They're valued at 5.7 billion, and they're a very sort of successful marketplace. We're positioning ourselves a bit differently, where we're focused on installment finance, going after more middle income and emerging market countries, and more focused on B2B2C. In terms of our investment profile, we've got about 90 existing investors, a mixture of family offices, VCs, and angel investors. I've also got a number of people with telecoms backgrounds. We've been on the boards of Vodafone, Bharti Airtel, Maxis, Tigo. We've got one family office which owns 100% of two telecoms operators, a bank and a handset distributor and a payments company. So we've got some strategic investors who we can roll out with. In terms of our partnerships, we work very closely with USAID in West Africa. That project was focused on getting farmers better access to smartphones, preloaded with agricultural services and weather forecasting. We worked with the United Nations in West Africa as well. They were more focused on getting women better access to smartphones and getting sort of better digital and financial adoption. We're also expecting to work with another multilateral organisation in other bits of Africa. So that's kind of, hopefully it's not just it's good business, which is very scalable, but B2B2C, but it's also impacting people's lives. I think people take for granted that we can get on Zoom calls, we can access WhatsApp, we can access the internet, but for most of the world, or a big slice of the world's population, they can't do that. So this is hopefully an opportunity for people to get access to these things. Just in terms of our funding round, we've raised 2 million so far at a 12.7 million pre-money valuation. We've got the rest of the round committed, but we're eager to bring in investors who can hopefully assist us as we grow. The use of funding is to really put the foot down, get to profitability in the next 3 months and scale, and use some of the capital for working capital, which is one of the things which has slowed us down historically. In terms of the wider vision, it's a bit like how Microsoft wanted to put a desktop computer on every table. Our vision is to put a smartphone in everyone's hands, and I think our technology and our route to market, where we can partner with big telecoms operators, retailers, handset distributors, and scale B2B2C is one way we can get there. Thank you.
Thank you very much, Alistair. Great presentation, a very motivational company you founded. So let's open up for questions. Yes, please, first one.
Where does your risk capital for the lending come?
So at the moment, we're not really looking to do it off our balance sheet. We work with FINTECHs who've got big balance sheets and can basically provide the capital. So I think our forte is more about building software and getting distribution deals, and then partnering with lenders who have got the balance sheets to provide the capital. But the lenders have found it very attractive because it's a very big market that we're operating in, and our software radically reduces the risk. We've been able to have very low default rates in some of the poorest countries in the world. So if we're able to do it in slightly more middle-income countries, then we'll expect to have even lower default rates. I think for many people, the smartphone is so important that it's something they're willing to pay for and be consistent and pay for.
And where is your addressable market? You mentioned Sub-Sahara or places like that. Is that where you're focusing on?
So I'd say about 80% of our revenue's in Europe at the moment, and a smaller portion is in Africa. But yeah, I think we feel like it's a very global opportunity. Certainly with some of our investors, we've got one of the family offices owns a telco in Asia and Eastern Europe, so we've got some other markets we can go into. I think some of the data we have globally is that of the 950 million people who can't afford a $70 smartphone but could on installments, about 400 million of those are in India, so there are, I think, big opportunities in Asia, but I think in the short term we're going to keep scaling in Europe and bits of Africa.
So just one last question. So you mentioned back market or Music Magpie and things like that. Don't you have to aggregate the phones itself? So where do you get that from?
Yeah, so we we have part of our business is a refurbishment business as well, so we've got 15,000 B2C customers, and we buy and use devices from our own consumers, but also from other wholesalers. So within the UK, the average consumer in the UK has got 4 phones lying at home, which they're not using. It's probably worth about £1,000. So there is a latent demand, and I suspect many people in this room are in that category. And yeah, we basically buy these devices, and then we sell the higher end ones in Europe, and then the lower end devices get sold in Africa.
Great. Other questions? Well, yes, please, Henry.
Hi, you're growing very quickly. I'm a specialist in those markets you're talking about. Have you thought much about what the Getty family did to go into Asia? Since you have an Asian telecom already, you form a joint venture with them. You take a passive stake and let them run it. Or same thing with Central Asia. You can't grow all these places at the same time, and these are powerhouses. You have a great business model and time to do this now.
Yeah, I think you're right. We can't go everywhere. I think there are definitely different models that we can do. I think certainly the benefit of the investor we have in Asia is the dominant business family in the country they're from. They own the bank, telco, handset distribution, payments infrastructure. So yeah, I think we're very well positioned in that country. And but yeah, I think you're right. We can't be everywhere. We need to pick and choose. And there'll be different distribution models depending on which countries we go into.
I think they can run it, and my point to you is that if we run the joint venture, you would have a minority stake. But the Getty family has made more money out of licensing their product in China with a 20% market share. Sorry, 20% ownership in that vehicle, they've made over $1 billion.
Yeah, I think that potentially there is.
Plus the IPOs going with that. So you might want to think about the Getty example.
Quick comments, yes. Any other questions? Yes, please.
Yeah, thank you, Alistair. Given, I guess, Africa is the focus, at least from some perspective, are there any local comps you can share? It looks like the comparative examples you mentioned are more in Europe. And I guess follow on that is, how are you thinking about this in context of falling smartphone prices with like the technos of this world and essentially local players who can finance?
Yeah, on the second question, we have done financing of techno devices. I think what we found is that the build quality is lower than a refurbished Samsung. So we found where we've sold devices in Africa, people have been very eager to get the Samsungs because they last 3 or 4 years, whereas some of the local devices in the market in Africa, unfortunately, the lower build qualities, and they don't last as long. So I think, we've had success in West Africa where people want to get good quality devices, and I think there's a poverty premium in a lot of countries where people on lower incomes are forced to buy low quality products and they break after 6 months or a year and they have to rebuy, whereas if they get a better product in the first place, then it means over 3 or 4 years they save a lot of money. So we're hopefully trying to get people out of that poverty premium position where, firstly they can spread the payments, but B, they're getting something which will last them 3 or 4 years. So I think that's definitely an important. Sorry, can you just repeat the first question?
Local comps, like the PageRoys of before, there are folks who are building this already.
Yeah, I think there are some companies who are active in our space. I think we're a little bit positioned a little bit different. We're able to white label our service. We do refurbish phones, and we do a few things. There's some innovative companies doing very clever things with credit scoring using alternative credit data. So I think in some cases there are companies that might look like competitors to us that we can collaborate with. But I think it's a very large market where I think unfortunately no company is going to dominate every single jurisdiction. So I think we feel there's certain markets we've got a relation that we can.
I guess final question. Yes. If you had to pick, would you pick the software play or the marketplace? Like, what part of the business model would you say you're more suited to?
Yeah, I think our strongest points are we've got a very accomplished software team, and I think the B2B2C piece where we can be a small company, but we can partner with a telecoms operator which might have 200 or 300 million customers. I think that's where we can really scale, because we can use the weight of their distribution, but we can act like a very clever software partner to them. So I think that's probably where we've got to feel like there's the most opportunity.
Fantastic, Alistair. Thank you very much. Great presentation.